What's going on, guys? I hope you are doing well this afternoon. It is 4:07 p.m. where I am at, and I'm looking at the S&P 500 daily chart candle close, and unfortunately it is bearish engulfing. Not only is it bearish engulfing, but it has broken this potential line of support that I've been keeping an eye on. Now, it's not the end of the world by no means. But usually when the 9 exponential moving average gets a daily candle close below, things kind of get a little choppy. So last time that happened was right around here. We got a candle close right around here at this area. Right there, and it led to the next day dumping off. Then we had a bullish engulfing candle, then it kind of came down, but ultimately at the end of the day it got choppy for a few days, a week, then it dumped, and ultimately then it started riding to the upside again. So we are in a precarious situation because now we did for the first part. So let me enhance this right here. Truth is, we created a higher high from the previous local high. That's truth, okay? We do have a bearish engulfing candle, okay? Where I'm worried now is losing the 21 exponential moving average and losing this line here as support. Now, that is far from the case. That is far from the case, to be honest. So, given that we lost this area potentially, I was kind of hoping this would get back tested as support and we'd continue to the upside. Now, ultimately, yes, it's one daily candle close below the line, but now that it's kind of invalidated itself as potential support, you kind of have to go more into, say, like a 4-hour, for example, a little lower term time frames. Now, why do I do that exactly? Well, I want to find a trend line in which we're seeing multiple touch points within this area. And frankly, from this point to the 4-hour, I am looking at here. This point, yeah, to this point. This makes a lot of sense. Alright, so this area I'm now looking for. So obviously we see convergence of two major support lines on significant time frames, which is right here. Convergences usually lead to support zones, vice versa if it's above price action. So realistically, if we did truly lose 4,087 as support, I now see support being at 3,963. Now, will this ever get tagged? Will this ever get touched? Will price ever come down here? That I do not know. What I do know is that on lower term time frames on the 1-hour, we have crossed to the downside. And now, as you can see, the exponential moving averages are now acting as they were from support to now resistance. The Bollinger Bands and the exponential moving averages are turning red on the 1-hour. And this candle is not only broken through here, this 1-hour's red engulfing candle has not only broken through the line of support, but the following candle after has back tested it as resistance. So this is not good from a bullish perspective. Now obviously the market is closed, so we're not going to see any action moving forward with this particular chart, but from what I'm seeing, it does look pretty bearish. I'll be completely honest with you. This line here at 3,963.91, it realistically is where I would see true support being at. That's 2.8% to the downside. That's not necessarily good in traditional stocks nor in crypto land, and crypto land reacts off of that. So honestly, if you were a bull, taking some chips off the table would be ideal. Because it's not necessarily a guarantee that this line right here will hold as support. It is theoretically support, but it might not hold. I would definitely hope so because it has back tested as support, but you know, there's a lot of macroeconomic news that could ultimately change the trajectory of this market. Now, given that this is a daily time frame, I do think ultimately that we are going to be creating a higher low instance. I truly believe that still to this day. Why exactly? Because of this descending broadening wedge breakout. You cannot deny that this is a descending broadening wedge that's been really holding strong as true support and resistance here. So resistance, 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 support, 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 the breakout. This usually leads to continuation to the upside. Now, we are in a precarious situation, like I had said prior, where we could break back into this channel area and go sideways, and maybe even go a tick lower to 3,783. Price could theoretically bounce like this until it, realizes, true support. Just something to keep in mind. But at the end of the day, these broadening wedges end at the top of the previous um, beginning of this pattern. So even though in the short term it looks bearish, long term this is definitely bullish and structurally sound. Because it's structurally sound, I don't let my emotions get the better of me. Yes, I didn't like seeing prices go to the downside, right? But at the end of the day, we are in a situation where, yeah, the bulls are technically still in control of this market. All right, so I'm going to cut the S&P 500 talk off and move to Bitcoin. Right around here. Okay, let's see what we got. All right, so we still have an hour left on the daily candle. It looks pretty bad, I'm not going to lie. A bearish candle close. The 9 exponential has yet to be tested as true resistance, so I wouldn't be surprised if after this candle closes, we see maybe like a pump of another like 4.5% to backtest the 9 exponential moving average as support. I'm sorry, as resistance. From that point, yeah, I would then kind of expect maybe like a bounce around the 0.618 or the 0.32. Now we have a high. We've had that high in for some time, and we've calculated. Unfortunately, I was really hoping that this range here, this range-bound price action would eventually break to the upside. But, in retrospect, looking at it, we did have staunch resistance at 25.3 that I did have to take in consideration. So even if price did break to the upside, we would have had staunch rejection right here, and we would have eventually broken down anyway. That's just obviously in retrospect at this time. I was really hoping at the end of the day that price would hold up, but we did prepare for this a few episodes ago. I did mention that the common areas of a retrace are the 0.618 and the 0.382 if price does end up retracing from its wick high top. All right, so I calculated it from getting the wick bottom to the wick top here. Did a Fibonacci extension, and yeah, there's a lot to be said in regards to the possibilities of a retracement to possibly 18.816 at the very worst. And it would make sense because unfortunately we did rip to the upside pretty substantially. So in essence, once we rip to the upside really, really fast and consolidate, usually it gets really quick to the downside. So I don't want to alarm you or whatever, but realistically, we could see potentially a dump all the way down to 14%. That's unfortunate, but that's just the reality of the situation. Now, obviously, the candle has not closed. We could see some ridiculousness in the next hour and a half, roughly. Usually the last hour of the daily candle close is the most volatile, so realistically by the time this video is up, we're going to be watching that candle in real time. But ultimately, I do see this channel, the yellow lines, as broken. From my current standpoint, I'm looking at a retrace at the very least, a current price action to dump another, say, almost 5%. That, in my opinion, if this candle closes at like how I think it's going to close, then yeah, it's most likely we're going to go down to the 618, unfortunately, or to the even to 382. The thing that aligns, the thing to me that what aligns is the Bollinger Band support line coming in at 19.3. So, obviously it's going to take days for this to kind of ratchet up here like it has, but ultimately I do kind of see a reaction at least of 618, and then from there I'll be able to assess the situation. Now, given how thick the money flow is on the daily chart, um, I do feel like we still have some room to run. I still think that we could kind of repeat an instance somewhat like this area right here. This is something that's more equivalent to the current price action that we're seeing. So if you go to this level here, we could be doing something like this. So yeah, we do break below the 20 exponential moving average, and for a span of say like basically 3 weeks, 3 weeks and change, we go sideways and down. From that point on, we create a trigger wave right here, and we just rip to the upside to then continue upward. But ultimately, 64% is pretty nice. Let's be real here. 64% pump is pretty good. But that's not set in stone, of course, But to me, given how thick the money flow is, I don't think that the bulls are just going to come out and just quit on this market altogether. So yes, currently short term we are seeing some sharp moves to the downside, but given how much new money is in the market, I do feel that as long as diamond hands hold true, we will see another leg to the upside prior to any significant dumpages. But anyway, this S&P 500 still looks bullish. It lost an opportunity to ratchet old resistance as support, but there are other support levels that are nearby that could ultimately pivot the price of the S&P to pump to the upside. So there's still that little caveat. But currently I do feel confident in assuming that the Bitcoin price will continue to the downside. Now, usually what happens, I think I mentioned this a little bit prior, was that the deep candle close will come in, then the next candle will pump like halfway through the candle, which is roughly another 2.8%. So, worst case scenario, if you are, this is not financial advice, but like if I was in a long position and I'm stuck in a negative position, right? Personally, I would wait for the candle daily close to go down, right? And then I would wait for the retrace, because essentially the bulls are going to try to push the price back to the upside, and they're going to test the 21 exponential moving average, and then they're going to test the 9 exponential moving average. I would wait for the 9 exponential moving average to get tagged to then close out my position. That's kind of like how I've always operated, because usually once there's a deep cut like this, there's usually somewhat of a retrace to the upside to then confirm a lower low and a lower high. So I would say that. Now that is a gamble. If you don't have the risk tolerance to attempt something like that, then by all means do what you need to do. But yeah, that's just something, just the logic that comes into my head. Now, what sucks about the Ethereum chart, I'm going to move to Ethereum now, is we do have a bearish engulfing candle, and we did have a sell signal and a divergence a couple days ago. So we had 1, 2, 3, yeah, so 1, 2, 3, 4, 5, yeah, 5 days ago. Damn, I can't count right now, sorry. 1, 2, 3, 4 days ago, okay? So I knew there was going to be some consolidation and stuff. So at this point, we were unable to essentially take control of 1,700. 1,700 has been a psychological resistance line for some time now from the daily perspective. But I'm gonna do a quick retrace here. I want to see, given the current market conditions, I want to do a Fibonacci line, Fibonacci retracement right here. Okay, so I'm gonna close that out, right? I'm gonna delete this. And gonna do some quick TA here. There it is. And there it is. Okay. So the Bollinger Bands are starting to come up to the 618, which is kind of interesting. Now, if the 618 can hold as support, then this is just kind of like a divot to where we eventually head up to the 1618 to tag it. Okay. Now, Ethereum's super volatile, and this entire bear market, any Fibonacci retracement has usually gone down, if I'm going to be completely honest with you, to the 0.32 or to the 0.236, just from what I've seen. Obviously, some market conditions have changed. This was a pretty parabolic move to the upside, but if history does hold strong, which I think it will, we're most likely going to see somewhat of a instance right here where it's just going to be a move to the downside, a pretty staunch move to the downside. Now, given the 618 has to get a daily candle close below, right, in order to trigger that additional dump to the downside of the 0.32 level. That's kind of like where my mind is at in regards to Ethereum. So let me go to a more kind of an intraday type of time frame. Let me go to, say, the 4-hour chart here. What I do not like about the 4-hour chart, I'll be completely honest with you, is we've been starting to get these sell signals right here on the bar below, on the dotted bar. It's been happening for some time now. We did get a sell signal, and since then it's just been down. As well, what I don't like is we got a low, then we got a lower low. I do not like that. It's usually a sign of a strong, a strong downward trend, and the money flow is starting to turn red on a pretty significant time frame on the 4-hour. So I'm going to zoom in on the 37-minute time frame, which is more intraday. Now, I don't trust these buy signals right after a cross. Okay. We had a nice little pump from this dot area. Okay. So we had a nice little 1 point at maximum. Usually people doesn't get the top, but we had like a roughly 1% pump this morning, and then we just ended up dumping harder after the sell signal. That was pretty unfortunate. And then I did mention this, actually I mentioned this in a couple of channels. We had some whale manipulation. Usually when you see these yellow X's, it just means that like very large trading accounts opened up bearish positions, and it was actually right at a key level, which was at the 0.786. So if you go all the way back to this entire consolidation period, the 0.786 was a form of support here for some time, and given the situation, we've now had a significant bearish candle close below the 21 exponential moving average, so that's what I'm most concerned about. Now, just as Bitcoin will eventually do most likely a retrace to the upside, I feel the same about Ethereum. I feel Ethereum, if we get a daily candle close like this, I would expect at some point some retest of the 0.786 as a resistance. We haven't gotten that yet, so like I do feel like there will be a rebound of 2% at some point to try to retest this. It's pretty rare that it just slices through. So I'm kind of keeping my eye out on that, on more so intraday levels, like on the 1 hour or the 37-minute time frame, which is a precursor of the 1 hour. Now, money flow is thick in the red now, and it is escalating. We do not see a dissipation of the money flow going to the downside. We actually see it expanding to the downside, so that's not a good sign. We do have a sell signal right here, so we could see a nice little rebound, kind of similar to what I was referring to. Now keep in mind the exponential moving averages, which is the 9 and the 21, they not only have crossed the downside, but they're now strong, thick in the red, which means that they're acting as resistance. So at best, we would see maybe a retrace a little bit higher above like 1597, maybe like 1600. So at this rate, that's basically a 4% pump. Will it flip the 0.786 support? That's kind of a stretch. For days now, I've I hate to admit it, but we do have a significant situation on our hands where we're creating pretty much lows. And I think this was, let me go to 4-hour, no, actually no, this was a higher, yeah, oh, okay, yeah. We literally had a double top right here. It sucks, but double tops are bearish. Did not notice that up until now. But yeah, we did have that. Also, it did align with the psychological number at 1,700, and 1,700 psychologically is resistance for the masses, as opposed to a ratcheting area for support. So it all makes sense. It all kind of hashes itself out. But overall, it's kind of hard for me to be bullish looking at this chart. The candle is bearish engulfing, and it's breaking outside of the Bollinger Bands. Usually this means that there's most likely going to be continuation to the downside. Whoops. I'm trying to see here what I can surmise from this. I mean, there is a pattern here that I could probably look at. So market liberator here. Let me turn on the inputs here. Auto trend. Let's see what we got on auto trend. Oh, okay, so we're right there. Hold on, let me zoom out because usually some of these things don't get really visible up until this point. Okay, this makes sense. This makes sense to me. We have like this line of support right here. So realistically, as you can see, there's literally nothing. There is literally nothing after this line. So if I see a 4-hour candle close pretty much below 1525, if we get a candle close below essentially 1530, 1525, that area, then we're most likely heading to the downside. And actually, to be honest, given what I'm seeing with these line chart, like with the lines, let me turn this into a different color just so you know what I'm referring to. I'm seeing some confluence around here at 1300. So we could BART to the downside. Now BART just means that we went really, really high. Now we can go really, really low, really, really fast. Kind of like how we went really, really high fast, we could go really, really low fast. So we have to be very, very cautious with that. Now obviously we haven't seen that candle close. But yeah, if you see a 4-hour candle close pretty much below 1520, we're most likely going to head to the 0.382 from my perspective. Now the 618 could bounce, but given what I'm seeing, if we do break below these two lines that I'm looking at staunchly right here, you see that those two lines? Let me try that one more time. Right there and right there. Whoops, my bad. Oh goodness, what am I doing here? There you go. There you go. This would get flipped as resistance, and this would indicate a cluster right here at 1600. So we're just ratcheting down from like 1.7k to 1.6k over time. It could eventually be 1.5k. Who knows? But I will say this. There's a lot of room from this line of support to this line of support. So to go back to my thesis, 1,520 loss of support, most likely going to tag this line right here. That's just how these trend lines work. Okay, so I'm going to do Litecoin because I've been talking about Litecoin. I'm going to do Litecoin and BTC. This is a rather interesting development that I had seen. Okay, let me zoom out here because it kind of does something where if I don't zoom out, it won't get all the lines. Alright, so I think that's good enough. We're kind of in an interesting spot right now where price is trying to break back to the upside, but it looks like it's getting rejected here over time, which is unfortunate because we had this like pump to the upside, and then unfortunately this is called a shooting star, I believe. So unfortunately we just weren't able to hold that. But at the end of the day, this line of support is still valid. But ultimately, I do feel that we're still consolidating within this range. We do have a low and then a higher low, even on the 4-hour time frame. You know, the crypto market is a homogeneous market, right? So whatever happens to Bitcoin, it happens to Ethereum, and whatever happens to Ethereum happens to Bitcoin, and vice versa. Everything's connected. All right, so a couple of days ago, I noticed a lot of clusters here, a lot of support resistance clusters. So to me, it's only natural that this area was going to get back tested as some form of support after this rally to the upside over time when you see a rounding type of situation. Unfortunately, it's most likely to the downside than not. Rising channels usually are bearish, and yeah, that's kind of like what I had assumed was going to happen. I just thought it was going to happen a little bit later, but nonetheless, we're here. Now, if this line of support right here gets broken, basically if you see a candle close below 21.714, 21.715, for sure if you see a candle below 21.700, that's not good at all. We're most likely going to come down to this area of support at 19K. So right here, this upward sloping line is pretty important. So if it is lost, we will dump pretty hard, if you ask me. Not a lot of support showing up after the fact. The next line of support comes in roughly around 20.4K. This is where I see some confluence here. But yeah, I wish I didn't have bad news for you. If you're a bull, if you're a bear, I mean shit. This is a good time to be shorting. Ideally, it was a good time. It's a good time to be shorting when price breaks out of the Bollinger Band on the top side, and it's good to be longing when price breaks out of the Bollinger Band on the bottom side. But obviously, you got to have some confluence. So we did have this bearish divergence that did play out. That is continuing to play out. We did have this buy signal right here, but usually I don't like those right after a cross. So if I see the 9 and 21 exponential moving average cross to the downside, and then I see a buy signal, I usually like to ignore them because they're pretty risky. I'll be completely honest. You can get like a quick scalp to the upside, but usually the red dot afterwards is really the moneymaker move, and that's when things kind of get pretty gnarly for that. But there's still an hour and 22 seconds left on the clock. If somehow, some way, this candle were to close above this line right here, basically break back above 22K, then we're probably talking bullish stories here. Given what I'm seeing on the chart, it's kind of hard to think that way. But ultimately, let me go to the 1 hour here. Yeah, we do have a lower low from the momentum wave. I don't like that. Usually I like to see a low then a higher low on the money flow. So let me go to the 24 minute. I like the 24 minute a lot. We don't have that. We don't have that just yet. What I'm looking for a bull, for a recovery, essentially a bullish recovery, is something like this on a time frame similar to the 24, the 30, or the 37, which is, we have this wave develop, okay? We have another wave that is higher than the previous wave from the top side. We come back down, and then we create a higher low on the momentum waves. That's what I'm waiting for a long signal. At this time, I'm out of the market. I'm more so checking to see the vital signs of the S&P, and I'm looking at my trigger waves. I'm looking at my momentum oscillators to see, hey, okay, when is it a good time to look for a long? Realistically, you want to look for longs something like this. You want to look for a low, you want to look for a higher low and a buy signal, okay? And it leads to situations where you get like that, okay? But that's just how I like to trade for intraday stuff. Doesn't mean that you have to, more so just, spewing my thoughts here. Anyway, I'm gonna leave it at that. If you're still listening, thank you so much for your time. I mean, I was already here talking for an hour, a half hour, I'm sorry. But yeah, I appreciate you. I hope you're doing well. Take care, be safe. Have a good one. Bye-bye.